Hey everyone, and welcome back. Today we're going to be tackling something that I think a lot of us find pretty confusing,
Mm,
and that is financial advice.
yeah,
So, we're going to be taking a deep dive into understanding how to even find a financial advisor,
right.
how to make sure they're legit, and how to figure out what all the kind of ins and outs are of that whole world.
Yeah, because it is a pretty complex world and it can be really intimidating to even know where to begin.
Right, exactly. How do you even know, when you need a financial advisor, what are the signs that it's time to call in the experts?
Well, one sign might be that you're just feeling overwhelmed by managing your investments,
Yeah, for sure.
or maybe you're not sure if you're on the right track to meet your financial goals.
Right.
That's when a financial advisor can really help assess your situation,
Yeah.
recommend suitable financial products, and create a plan that aligns with your goals.
Yeah, I think that's a great point. Sometimes it's hard to see the forest for the trees,
Yeah.
when you're so caught up in the day-to-day of budgeting and bills and all that stuff. It's
Yeah.
you can lose sight of the bigger picture.
Yeah, and that's where an advisor can help.
Okay.
They can provide that objective perspective and that expertise to guide you in the right direction.
Okay, so let's dive into the nitty-gritty here. What exactly is a financial advisor?
So the term financial advisor, it's a pretty broad term that encompasses a variety of professionals.
Okay.
You might encounter financial advisors at your bank. They might be investment brokers, insurance agents, or even financial planners.
Gotcha. So not all financial advisors are created equal.
Exactly.
Yeah.
And to add to that, not all advisors are planners,
Uh-huh.
and some specialize in specific areas.
Okay, so it's important to figure out what their specialty is.
Yeah, for example, you mentioned financial planners. They help create long-term plans for your finances.
Right.
This could include retirement planning, tax strategies, estate planning, and more.
Oh, wow. So it's like a holistic approach.
Yes, exactly.
Okay, so let's say we're looking for a financial planner specifically. How do we know if someone is actually qualified to call themselves a financial planner?
Well, that's where things can get a little tricky.
Oh, boy.
The terms financial advisor and financial planner, unfortunately, they don't always guarantee specific qualifications, expertise, or certifications.
Wait, really?
Yeah, it might surprise you to know that in some provinces, anyone can use these titles.
What?
Yeah, there are regulations in some provinces,
Okay,
but it's important to check your local regulations
that makes
to
sense.
see what applies to you.
So how do we make sure we're not getting duped by someone who's just, slapping a fancy title on their business card?
Look for advisors who have invested in their education, training, and experience.
Okay,
These are the things that really set some advisors apart.
gotcha.
When it comes to financial planners, there are 3 common designations you should look for:
Okay, let's hear them.
certified financial planner, personal financial planner, and registered financial planner.
Okay, so those are the gold standard.
Exactly. They've met rigorous standards for education, experience, ethics, and they're required to stay up to date with the latest industry knowledge.
Okay, so that's definitely something to look for.
Absolutely.
Yeah.
And, it never hurts to ask potential advisors about their education,
Right.
their training, and
Right.
their experience to ensure that it aligns with your financial goals.
Yeah, that's a great point. You want to make sure they're actually qualified to help you with your specific needs.
Exactly.
Okay, so we've talked about qualifications, but how do we even start finding a trustworthy advisor?
Well, there are some great resources out there to help you.
Okay.
One is the National Registration Search.
Oh, I've heard of that.
Yeah, it allows you to check if an advisor is registered, and you can also search for complaints or disciplinary actions.
Oh, wow. So it's like a background check.
Exactly, and organizations like CIRO, the Canadian Securities Administrators, the BBB, they often have databases where you can check for complaints or disciplinary actions as well.
Okay, so it's like doing your due diligence
Exactly.
before you hire someone.
It's always better to be safe than sorry.
For sure. So, are there any red flags we should be looking out for when we're researching potential advisors?
Absolutely. If you find inconsistencies in their credentials, that's a big one,
Okay.
or vague descriptions of their services,
Uh-huh.
or a lack of transparency about their fees, those are all red flags.
Gotcha. So if something feels off, trust your gut
Absolutely.
and move on.
Exactly.
Okay, so let's say we've done our research. We've narrowed down our list to a few promising candidates. What's the most important thing to consider when we start interviewing them?
I would say the most important thing to understand is how they get paid.
Okay, yeah, that makes sense. Like you wouldn't hire a contractor without knowing their billing method.
Right.
So you need to be clear on how your advisor is compensated.
Exactly, because their payment structure can actually influence their recommendations.
Ooh, that's a good point.
So it's important to understand how they're incentivized.
Okay, so let's break down the different ways advisors charge for their services.
All right, so some advisors charge hourly fees, which is
Okay.
pretty straightforward.
Yeah, you pay for their time.
Exactly. Others might charge a percentage of the assets they manage for you.
Okay.
This is known as an asset-based fee.
So if my portfolio is worth $1 million and they charge a 1% fee,
Right.
that would be $10,000 per year.
Precisely. And then there are commission-based advisors who earn their income by selling you financial products like mutual funds or insurance policies.
Okay, so their compensation comes from the companies that issue those products.
Exactly.
Okay, so the compensation structure can really vary. How can we tell if an advisor is truly looking out for our best interests or just trying to line their own pockets?
Transparency is key. A trustworthy advisor will openly discuss their compensation structure. They'll explain the rationale behind their recommendations, and they'll address any potential conflicts of interest.
Gotcha. So it's like choosing a doctor. You wouldn't settle for someone who prescribes medication based on which pharmaceutical company gives them the biggest kickbacks.
Exactly. You want someone who's focused on your financial health, not their own profit margin.
Right, because this is our financial future we're talking about, so we don't want to be shy about asking these tough questions.
Absolutely.
Okay, so it sounds like asking the right questions is crucial in this process.
Yeah.
What are some key questions we should be asking potential advisors during those initial interviews?
So start by asking about their experience and credentials. How long have they been an advisor?
Okay.
What kind of clients do they typically work with? What are their areas of expertise?
Gotcha.
And then inquire about their investment philosophy and how they tailor their strategies to individual clients.
So it's not just about their qualifications,
Right.
but also about their approach to investing
Exactly.
and how well it aligns with our own values and goals.
Precisely, remember, this is a long-term relationship.
Mhm.
You want to feel confident in their competence, their communication style, and their ability to understand your unique needs.
Yeah, that's such a good point. Like, you need to feel comfortable working with this person.
Absolutely.
Okay, so this is all really insightful. I feel like I'm starting to get a better grasp on navigating the world of financial advice.
I'm glad to hear that.
But before we move on to actually working with an advisor, I want to touch on one more thing.
Sure.
What should we be aware of before we actually meet with potential advisors?
Yeah.
Like, how do we prepare for that first meeting?
Well, first of all, you don't need to be a financial expert to talk to one.
Okay, that's good to know because I'm definitely not.
But it's helpful to be prepared.
Okay.
Think about what you want to achieve financially. Are you saving for retirement?
Hmm.
Buying a house, funding your child's education, having those goals in mind will help you and the advisor develop a personalized strategy.
Yeah, it's like going to a doctor with a list of symptoms. The more information you provide, the better they can diagnose and treat the problem.
Precisely. And it's also helpful to gather some basic financial information before the meeting.
Okay.
This might include details about your income, your expenses, your assets, your debts. Having these figures readily available will save time and ensure a more productive conversation.
Okay, so be prepared,
Mm-hmm.
be informed, and don't be afraid to ask questions.
That's the spirit.
This is great. I'm feeling much more confident already about this whole process.
That's great to hear.
So now that we've covered finding a financial advisor, let's move on to the next step, which is actually working with them to create your financial plan. And we'll dive into that in the next part of our deep dive.
Sounds good. Welcome back. All right, so we've talked about finding a financial advisor and how to vet them.
Yeah.
But now let's talk about what happens once you've actually chosen one.
Okay, yeah, like what are the next steps?
So one of the first things your advisor will probably want to do is figure out your risk tolerance.
Risk tolerance.
Mhm.
What's it?
It's basically like how much risk you're comfortable taking with your investments.
Oh, okay.
You know, some people are totally fine with big swings in the market,
Yeah.
while others freak out at the slightest dip.
Right, right. It's kind of like some people love roller coasters and some people get motion sickness just thinking about them.
Exactly. And your risk tolerance is going to play a big role in what kinds of investments your advisor recommends.
Okay, that makes sense. So like someone who's super risk averse probably shouldn't be putting all their money into like super volatile stocks.
Right, exactly. Your advisor is going to want to build a portfolio that aligns with your risk tolerance.
Okay, so risk tolerance is one thing, but what about like time horizon?
Yeah, that's another crucial factor.
Okay.
Time horizon is basically how long you plan to invest before you need to access the money.
Oh, okay.
So, for example, if you're saving for retirement, that's a long-term goal.
Right.
Whereas if you're saving for a down payment on a house,
Yeah.
that's a shorter-term goal.
Makes sense.
And your time horizon is also going to influence the types of investments that are suitable for you.
Okay, so like someone who's younger and has more time to recover from losses,
Right.
they can probably afford to take on more risk.
Exactly.
Okay, so we've got risk tolerance, time horizon. What else?
Well, then there's diversification.
Ah, yes, diversification. I've heard that's important.
It's one of the fundamental principles of investing.
Okay.
It basically means spreading your money across different types of investments.
Okay, so not putting all your eggs in one basket.
Exactly, because if one investment tanks, you don't want your entire portfolio to go down with it.
Right. That makes sense.
Yeah.
So, like, what are some examples of different types of investments?
Well, you've got stocks, which are like ownership shares in companies,
Yeah.
bonds, which are loans that you make to governments or corporations, real estate commodities like gold or oil.
Wow, so many options.
Yeah, there are a lot of different asset classes to choose from.
Okay, and diversification means like having a mix of all these different things.
Exactly. And the specific mix is going to depend on your risk tolerance, your time horizon, your financial goals, all those things we talked about.
Right. So it's not like a one-size-fits-all kind of thing.
Nope. It's all about creating a portfolio that's tailored to your individual needs.
Okay, so let's say we've figured out our risk tolerance, our time horizon. We've got a diversified portfolio. What's next?
Well, your advisor is going to want to talk to you about your financial goals.
Okay, yeah, like what are we actually trying to achieve here?
Exactly. Are you saving for retirement? Are you trying to buy a house? Do you want to travel the world? What are your dreams?
Right. And then the advisor can help you figure out how to make those dreams a reality.
Exactly. They'll work with you to develop a plan to reach your goals.
Okay, so we've got our investments all figured out. What about like other aspects of financial planning?
Yeah, there's a lot more to it than just investments.
Okay, like what?
Well, there's retirement planning, tax planning, estate planning. All these things are important too.
Oh man, it sounds like a lot to keep track of.
It can be, but that's why having a financial advisor is so helpful. They can guide you through all of it.
Right. Okay, so let's start with retirement planning. What does that involve?
So basically, it's all about figuring out how much money you need to save to live comfortably in retirement, and when you need to start saving, and what kinds of accounts you should be using, and how to manage your money once you're actually retired.
Wow, that's a lot to think about.
It is, but it's important to start planning early.
Yeah, I guess the sooner the better.
Exactly. And your advisor can help you figure out a plan that works for you.
Okay, so what about tax planning?
Taxes are another big part of financial planning.
Yeah, nobody likes paying taxes.
I know, right? But it's something we all have to deal with, and a good advisor can help you minimize your tax liability.
Okay, so they can help you find ways to pay less in taxes.
Exactly. There are all sorts of strategies and deductions and credits that you might be eligible for.
Okay, so it's not just about how much money you make.
Right.
It's about how much money you get to keep. Okay, and then there's estate planning. What is that all about?
Estate planning is all about what happens to your assets after you die.
Okay.
So it involves things like creating a will, setting up trusts, designating beneficiaries for your accounts, all that fun stuff.
Right. Not the most cheerful topic, but definitely important.
It's about making sure that your wishes are carried out and that your loved ones are taken care of.
Okay, so we've covered a lot of ground here. Risk tolerance, diversification, retirement planning, tax planning, estate planning.
Yeah, it's a lot to take in.
It is, but it's all starting to make sense now, thanks to you.
I'm glad to hear that.
Okay, so before we wrap up this part of our deep dive, I want to touch on one more thing,
Sure.
and that's fees.
Ah, yes. Fees, the elephant in the room.
Exactly, like we've talked about all these different services that advisors provide, but how much does it all cost?
Right. Well, that's a great question, and it's something that we'll be diving into in the next part of our deep dive.
Okay, great, because I'm definitely curious to know more about that.
Yeah, we'll break down all the different types of fees and how to make sure you're getting a good value for your money.
Awesome, I can't wait. Okay, so we're back and ready to tackle the sometimes dreaded topic of financial advisor fees.
Yeah, fees are definitely something that people don't always love talking about.
Right, but it's super important to understand them
Exactly.
so we can make sure we're getting our money's worth.
Right, like with any service, you want to know what you're paying for and why.
Okay, so let's break it down. What are the different types of fees we might encounter when working with a financial advisor?
Well, we kind of touched on this earlier.
Yeah.
But, there are fee-based advisors
Right.
who typically charge a percentage of the assets they manage for you.
Okay.
It's often called an asset-based fee.
Okay, so like if my portfolio is worth $1 million and they charge a 1% fee,
Right.
I'd be paying them $10,000 per year.
That's right.
But are there any other fees on top of that?
Yeah, sometimes there are. Some advisors might also charge separate fees for creating a financial plan,
Okay.
which could be like a one-time fee or an annual fee.
Gotcha.
And even within those fee-based models, there can be some variations.
Oh, okay, like what?
Well, some advisors use a tiered fee structure
Okay.
where the percentage you pay actually decreases as the value of your assets grows.
Oh, so like the more money you have, the lower the percentage you pay?
Exactly.
Okay, that makes sense, I guess. But what about commission-based advisors?
Right.
How do those fees work?
Well, with commission-based advisors,
Right.
the fees are actually embedded in the financial products they sell you,
Oh.
like mutual funds or insurance policies.
So it's not as transparent.
Right.
And it could incentivize advisors to recommend products that will earn them higher commissions,
Yeah, that's definitely a valid concern.
even if there are better options out there.
Exactly.
Yeah. So how can we tell if an advisor's recommendations are truly unbiased?
Well, the best thing you can do is ask questions.
Okay, like what kinds of questions?
Yeah, ask about the specific reasons for their recommendations. Ask if there are any lower-cost alternatives available and why they might not be recommending those.
Gotcha.
A good advisor will be happy to answer those questions and provide clear explanations.
Okay, that's good to know. So we've covered fee-based and commission-based models.
Right.
What about those hybrid advisors who
Yeah.
use a combination of both?
Yeah, those hybrid models can be a bit more complex.
Okay.
They might charge an upfront fee for creating a financial plan
Uh-huh.
and then earn commissions on certain products they recommend.
Okay.
The key here is to really understand how the fee structure works
Yeah.
and what services are covered by those fees.
Okay, so it sounds like we need to be really diligent about understanding all these different fee structures.
Absolutely. It's your money.
Yeah.
So you want to make sure you know where it's going.
Exactly. Are there any other tips for navigating this fee landscape?
Well, don't be afraid to negotiate fees.
Really?
Yeah, just like you might haggle over the price of a car,
Okay.
you can often negotiate advisor fees.
Well, that's interesting. I never would thought to do that.
Yeah, especially if you have a large portfolio or you're bringing in additional family members as clients.
Okay, good to know. Are there any other hidden costs we should be aware of?
Well, keep in mind that some financial products have their own embedded fees,
Okay.
like expense ratios for mutual funds
Right.
or management fees for ETFs.
Uh-huh.
Those fees aren't paid directly to your advisor,
Right.
but they do eat into your investment returns.
Okay, so it's important to factor in all these potential fees when we're evaluating different investment options.
Exactly. It's not just about the advisor's fees, but also the underlying costs of the investments themselves.
Right, right. And then there are also trading fees,
Yeah, those can add up.
especially if your advisor is constantly buying and selling things in your portfolio.
Right.
Okay, so we've got advisor fees, product fees, trading fees. It's a lot to keep track of.
It is, but the key is to ask the right questions
Okay,
and be a savvy consumer.
right. Don't just blindly trust anyone with your money.
Exactly. Shop around.
Compare fees across different advisors.
Okay.
A higher fee doesn't always mean better performance.
Right.
And sometimes a lower cost advisor can actually deliver excellent value.
Okay, that's really good to know. Any final words of wisdom as we wrap up our deep dive into financial advice?
Well, I think the most important thing to remember is that finding the right financial advisor is like building a long-term partnership.
Yeah.
It's about trust,
Mm-hmm.
transparency, and shared goals.
Right. You want to feel like you're on the same page.
Exactly. Don't settle for an advisor who makes you feel intimidated or confused.
Okay.
You deserve clear communication, sound advice, and a fee structure that makes sense for you.
Absolutely. That's such a great reminder. And if anyone's feeling overwhelmed or unsure where to start,
Yeah,
they can always reach out to Milestones Financial Group.
that's a great suggestion.
They have a team of experienced advisors who are committed to providing personalized guidance and transparent fee structures. You can visit their website at milestonesfinancialgroup.ca to learn more.
Yeah, they're a great resource. Well, that's all the time we have for today. Thanks for joining us on this deep dive into the world of financial advice. We hope you learned something new and feel more empowered to take control of your finances.
Thanks for having me, Mafo.